The crypto autumn in the 2021, we ended up falling into a halfway back from zero, from essentially, coming into a full retracement, lows to highs. And we bounced off of those levels, and we had previously had a series of traditionals that blew through their targets. And we were going straight down in extensions. Well, the extensions failed, and then we ended up squeezing up into a full traditional short from highs. And then we continued the Bitcoin winter from those prices and ended up falling, 75% into November of 2022, which was 364 days from when the Bitcoin winter had started. And the Bitcoin winter, of course, started again 3 years later, and we put in our highs in October. And what we're projecting is that we have a 73% decline, or October 6th of 2026. And we fell into the halfway back long from lows to highs again. We fell into a full retracement from essentially zero. That was 60,000, 63,000. We bounced off of 60,000. And what we were trailing here as we were going into the weekend was the extension. And we didn't break the extension. We did not break the extension short levels. In fact, we went right to the line in the sand, and it literally stick saved its downtrend here. And as you can see, those extension short targets are down at 55,109. Our bearish below line in the sand is the 72,825. The question that we were asking here as we were going into our week and specifically into our morning was, despite the fact that we hadn't broken through a traditional short, was there going to be participation inside of a counter trend long from lows anyway, despite the fact that we hadn't broken trend like we did in the last crypto winter? And we got a little bit of an answer here today as we were coming out of our 9 o'clock time frame, in that we had a front run of a 38.2% line. Now, there are still shorts that we are running into here as we're coming out of the daily doldrums, and they lead us right to the long setup. And so as we go on into the week, there's still a weakness event that we're inside of. And there was a bid coming out of that 38.2% line this morning. And now as we're coming out of the daily doldrums, there is a sell from our Friday highs to lows on Bitcoin. And you can see this on Ethereum as well too. Ethereum bounced off its 38.2% line, and we haven't quite made it back up into our larger resistance levels like Bitcoin has. But both of those instruments had a bid off of support, and we're coming out of the daily doldrums, and they are falling or coming off of our resistance. Let's go do some backtracking here and talk about our leading indicators. And we're starting off here inside of the dollar. Now, the dollar is inside of this massive support level, and it hasn't broken it. There's a pullback that we ran into from 2 Tuesdays ago, lows to highs. And this dollar strength trade could potentially create weakness inside of the indices, because there is currently a correlation that is turning more negative over the 30-day period. Now you can see all of these 30-day correlations are negative, but they're backed up by the 15-day time frame. And so you have a -7. This stream continues at eMoneyAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.